So this crisis gave rise to a thought of implementing certain provisioning norms where a bank had to stipulate some capital, which we call capital adequacy norm. And then Basel Committee, which was already there, Basel 1 norm and Basel 2 norms were there, but Basel 3 norm, after this crisis, Basel 3 norms was made very, very stringent. You may read this after in subsequent classes. Some faculty member may be taking this class also. So in 1974, basically, it started in 1974 actually, Basel 1, with 10 members only. And Basel 1 accord was signed. Basel committee was formed in 1974. 1988, the first accord was signed where a minimum capital adequacy ratio of 8% was fixed. But not many countries were following this Basel 1 and Basel 2 accord. Basel 2 accord came in 2004 after that Euro zone thing came up. But Basel 3 came after this 2007-8 in 2010. And here, the principal and sound liquidity ratio were fixed, the rules were set, and all banks, I think 54 member countries are there now, they have to adhere to Basel III norms if they want to trade globally, if they want to operate globally. Now, two things I would like to cover before coming to India. When you see the global banking scenario, there are some countries which do not allow foreign bank branches to open as a branch. They allow only through subsidiary routes. Even in USA, California, no Indian bank can open a branch in California. They will have to open a subsidiary. So SBI has a SBI California subsidiary there. Latin American country, you can go only through subsidiary route. And what is the difference between subsidiary and branch? Branch function as a unit of a parent, which is regulated by some other country, regulator in a different country. So whatever happens to that branch, that impacts the regulator, the main parent also. If there is a scam, if there is a fraud, if there is a collapse of that branch in a particular country, that financial loss is borne by parent also. The reputational loss is borne by the parent also. But if subsidiary route is taken, then a subsidiary is incorporated in that particular country that is being regulated by that is being regulated by the local regulator of the host countries. Their regulation becomes prominent. So since that is incorporated in that particular country, the host country has to take some responsibility. So these are the developments. Now, if you see in India, many foreign banks which are operating, they are not opening branches. They are coming through their subsidiary route also. Citibank has shut down their branches because they were not eager to go for subsidiary route. We also prefer that because then the regulator has a better control over that entity. So now, globally, subsidiary route is preferred by most of the regulators. So I think 1 hour is almost finished. I have covered that. Now, something I will talk about half an hour on India, and then we can have a question answer session. We can talk, interact, basically. So in India, if you see banking history, again, we all everything we say written in Vedas. There was a term usury, which was in Veda. That has found in Manusmriti also, and Jatkas also, Shruti and Jatkas also. People say usury were basically a lenders. They were giving, taking something like gold, and in lieu of that, they used to give some money to the needy. Kautilya has mentioned about lending activity in Arthashastra. So the first banking activity, if you really ask me, was in Mauryan period, where one Adesha was issued. There was official document, Adesh. Adesh is order. So the authority issues order to give loan under that order. If someone was doing it, so that was a regulatory. Again, we can say that was a regulatory guidelines by the Mauryan Empire. Adesha was, we can say, modern bill of exchange. So if someone is carrying that Adesha, people used to give money to that to the extent of the amount mentioned in that Adesha. Like someone who is carrying a draft and goes to a bank just verify the KYC and find everything is okay, they pay the money or create the account, deposit that draft to that account. So this was like a bill of exchange, this Adesha, where government used to issue that, and the recipient used to pay that much amount and keep that Adesha for future. When the money was returned, they used to give back that Adesh. So that was a bill of exchange. Later, we find something called Rin Patra also. It's a Hindi terminology. I don't know how many of you may be able to know, but Sanskrit also. Rin is a Sanskrit word. So Rin Patra, Rin Panna, and Rin Lekhya. Lekha is written. So Rin is loan. So something, a documentary evidence of a person taken a loan was created. Then in Mughal period, it got formalized in the form of dastavez. Dastavez is document. So two types of dastavez were there in Mughal period. Those who were doing banking activity, they were dastavez a indul talab. That means this was a payable on demand. Indul talab. Talab is whenever that is being asked. So dastavez a indul talab and dastavez a मियादी. मियादी, हम लोग अभी भी we call term deposit receipt as मियादी जमा receipt, isn't it? मियादी is a term. So one was demand loan, other was a term loan for a specific period. So you can say the formalization of loan into demand loan and term loan, we found that evidence in the Mughal period. Okay. So payable after a period of time is term loan. So suppose somebody was asking for 1 year loan. So they used to give it 1 year term loan. That was the and Dastavez and Miyadi was issued. There are also records of Indian bankers, lenders issuing bill of exchange in foreign countries. The evolution of a hundis or letter of credit, yeah, also was found there, found that period, found abroad, and during Mughal period or prior to that also, the concept of hundi was found. In colonial area, if you come, Union Bank of Calcutta in 1829 was formed. But there is a very little document about this bank because this bank could not run for long. So there was a Union Bank of Calcutta. And now, why Calcutta? You will find that many banks, even foreign banks, were established in Calcutta because that was a trader's hub. The British Empire got settled there. There was River Way, and there were sea route also. Since British Empire landed in British colony, they landed in traders landed in Calcutta. Most of the banking activity started there. So Union Bank of Calcutta in 1829, a private joint stock company. This was a private joint stock company which converted into partnership subsequently. And it started its agency in 1840 in Singapore. You will be surprised to know. This Union Bank of Calcutta, which was a joint stock company, later converted into partnership, established their agency in 1840 in Singapore. And then it revealed that it has suffered a huge loss and a fraud done by their bank accountant. So it was incorporated officially in 1845 and failed in 1848. So 101 years prior to independence, this bank collapsed. And it ran only for 3 years after incorporation. Prior to that, it was a joint stock or partnership firm. So it was not incorporated as a company. The Again, 1865, Allahabad Bank was established in Calcutta. So Allahabad Bank was established by a business family, known business family, and that bank continued till it merged with Indian Bank a few years ago. Allahabad Bank got merged with Indian banks. You all may be knowing. And in 18, I think 2020, 2019 or 2020, before COVID, almost the merger was done. So it is now, but still you will find that logo, Indian Bank logo, along with Allahabad Bank also they mention small. Foreign banks also started operating in Calcutta in 1860s. Grindlay's Bank opened their branch. Then one bank from France, Compagnie de Campo El Paris, was established in Calcutta again in 1860. In Bombay in 1862, followed by branches in Madras. That was one branch they opened. They were having main area of operation in Madras, so they opened there Pondicherry and Chennai. HSBC established bank in Calcutta in 1869. So these all foreign banks, since the British Empire was there, they came into India also. The first entirely Indian joint stock bank was Awadh Commercial Bank. Entirely Indian. We are talking of entirely Indian joint stock commercial bank. That was Awadh Bank of Commercial Bank, which started operating in Faizabad, which is now Ayodhya, you can say, in 1881. But it again failed in 1958. 1958, it failed almost 60 years or 70 years, 77 years they operated. Second fully Indian bank, can you name that? Fully Indian bank was Punjab National Bank. But Punjab National Bank got incorporated in Lahore in 1894. So Lahore is now in Pakistan, but they were the second fully, and they are still in existence as PNB in India. 1770, there was one bank, Bank of Hindustan, which was liquidated in 1829-32. And I talked initially that there was one General Bank of India, which got operated in 1786, but in 5 years, that also got liquidated. So I have not talked much about that. Now, the oldest bank is State Bank of India. Or State Bank of India has a history of 218 years. The first bank that got incorporated was Bank of Calcutta in 1806. Then in Bank of Bombay came into being, and then Bank of Madras. These three banks were Presidency Bank, and they were called Presidency Bank. Now, these Presidency Bank merged to form Imperial Bank of India in 1921. Now, who was the regulator for these banks? Who was the regulator? Basically, Imperial Bank of India was also doing the regulatory job till RBI came into being in 1935. So Imperial Bank of India was commercial banking entity also and the regulatory banking entity also till 1935. And at that time, the branch heads were called agents because this was an agency arrangement. They were agents of British government. The bank was agent of British government. So this bank opened branches in several parts, Imperial Bank of India. And subsequently in 1955, by the Act of Parliament, it was renamed as State Bank of India. So State Bank of India came into being in 1955. We can say that Imperial Bank changed its name to State Bank of India. And it was through an Act of Parliament. In 1959, associate banks, there were 7 or 8 banks operating in various geography. In Kerala, there was a State Bank of Travancore. In Hyderabad, the State Bank of Hyderabad. In Jaipur, there were 2 banks, State Bank of Bikaner and State Bank of Jaipur. So in 1961, the State Bank of Bikaner and State Bank of Jaipur got merged to form State Bank of Bikaner and Jaipur. Then there were State Bank of Indore, State Bank of Saurashtra. Basically, these were all run by kings, local kings or local kingdoms, which were doing the banking activity. So the government of India decided to promulgate a State Bank Subsidiary Act. And these 7 banks were made SBI's associate banks. So the logo was common thereafter. Subsequently, in 2007 and 2013, I think 12 or 13, 2 banks got merged with the State Bank of India. 2007, it was State Bank of Saurashtra, the first bank to got merged with the State Bank of India fully. And in 2012 or 13, the State Bank of Indore. In 2017, remaining 5 banks, State Bank Bikaner in Jaipur, State Bank of Hyderabad, State Bank Travancore, State Bank of Mysore, and State Bank of Patiala. These 5 banks got merged with the State Bank, so there are no associate banks left now. And then in 1969, bank nationalization happened. Bank nationalization happened, There were many private companies which were running banks. So Allahabad Bank, Bank of India, Bank of Baroda, Central Bank of India, Union Bank, United Bank, UCO Bank. There were many banks, Corporation Bank. So there were 14 banks which got nationalized. They were private banks. So government took over through a nationalization act the ownership of those banks. And in 1980, when Mrs. Indira Gandhi came back second time after in 1977, she was thrown out of the power. In 1980, she came back. She again did nationalization of six banks. And the reason for nationalization was to put focus on the development of rural and semi-urban areas because private banks were only giving loans whom they want to give. So government's welfare measure, India was a sovereign socialist republic, welfare state. So welfare activities were not happening as per, and banks were not engaging those welfare activities. Government focus in rural area to develop rural area could be through only funding by banks. So Mrs. Gandhi nationalized that in 1969 and 1980. And then many organizations started coming into play like NABARD and Exim Bank, National Housing Bank. So many things happened thereafter. 91 was the saw the change in the types of business that we were doing. Globalization came into play a role. Mr. Narasimha Rao was the Prime Minister, Mr. Manmohan Singh. India was part of global changes. We agreed to certain conditions of IMF and we opened our financial sector for foreign banks or for private banks. Again, so four development banks were there in India. When I talked about uh, type of banks in the next session on 5th, I'll explain. So the role of long-term funding was done by the development banks. So there were IDBI, there was ICICI, there were SDFC. SDFC was into housing finance. ICICI and IDBI and IFCI, they were doing long-term funding for projects financing. So these banks were basically asked to go for a universal bank license, open their subsidiary as a private bank, and subsequently those banks got merged with these private banks. So ICICI is no longer existing, IDBI no longer existing. Their subsidiary private banks are existing, ICICI Bank and IDBI Bank, and SDFC also opened a SDFC Bank. So SDFC also no longer exists. So these banks came into and now many private banks are there. Recently, RBI also came out with thought on some smaller banks. So they came out with two ideas of payment banks and small finance bank. So payments banks are not supposed to lend. They are only taking deposits and doing some remittance business. Small finance banks are basically, I should say, upgrade between full-fledged commercial bank and NBFC. So they are banks doing microfinance also and doing some small ticket loans beyond microfinance limit. So they are doing full commercial activity, but ticket size is smaller. And there are certain restrictions on them also. So if you see history of Indian banking, there are various types of banks. There are scheduled commercial banks. There are non-scheduled commercial banks. There are regional rural banks. There are many other banks also, like housing banks. NHB is there. Exim Bank is there. But CDB is there, Small Industrial Development Bank. And private banks, lot many private banks. Foreign banks are there, but their presence is now limited. Dominate players are mainly public sector banks and private sector banks. There are a state level bankers committee also. So, 2 3 points. We'll be talking next day on regulations like Banking Regulation Act. I'm not going to cover each and every aspect of that. I will give you brief about that because it's an introductory reference. I may be talking about acts which are very important, like Negotiable Instrument Act, Contract Act, which are very important for banking point of view. I'll tell you structure of banking in India, to some global structures also, if I have some thing to say about that. And what is the difference between a Reserve Bank of India and other regulators? So, mostly Indian banks are very, very healthy and they are doing a phenomenal job. So, but regulations are corporate governance is a very, very important thing. So all banks are subjected to three regulators in India. Ministry of Corporate Affairs, because they are incorporated uh, as under Company Act, except for State Bank. Except for State Bank. State Bank is not incorporated under Company Act. The State Bank is incorporated under the State Bank of India. And SEBI, because most of the banks are listed entities. 99% banks are. I don't think any bank is unlisted these days. And if one or two banks are there, they may be 100% owned by Government of India. But all private banks are. Even Bandhan Bank is listed. If you have seen, IDFC First Bank is listed. So all banks are listed entities. So SEBI also regulates them. And Reserve Bank is the basically owner of these banks. So they are the main regulator. But like housing finance company, HDFC was a housing finance company. It was not regulated by Reserve Bank. It was regulated by NHB. So there are many other entities also which doesn't get regulated by Reserve Bank, but are doing non-banking activities, financing activities like housing finance or anything else. So we will be talking about that specifically on that date. But one more very important thing for you people is to go through the acts. Understand the difference between relationship. What is the relationship? Like State Bank or many banks hold currency on behalf of Reserve Bank. So what is the relationship of that? I know whether it's a trust a relationship or whether it's a functional relationship where RBI pays something or whether it's a lesser and lessee relationship, what kind of relationship it is. Since these are governed by regulations, lawyers' role is very, very important. So as a legal fraternity, your job is to interpret and see whether the regulations are adhered to or not. So prior to that, you have to understand everything. And this course is intended to make you aware of banking regulations. This will give you some insight into that. So thank you very much. If any question is there, I may take that. And if I'm able to answer right now, I will answer. If I'm not able to answer, I will check that because I don't want to mislead you in any way. I will note down the question and then in next session, I will definitely answer that. Anything which I might have missed, and if you want to ask, because you all are a well-educated person.
Hiba, please unmute yourself.
Thank
Yeah,
you,
Hiba.
sir, for this informative session. Now we will have a Q&A session. You can also ask questions and seek clarifications on the topics covered.